Hi and welcome to this video. My name is Nicolas. I'm an email marketer for fashion brands. And if you're here, you want to know how to calculate your Facebook ads budget or how much money you should give the good Mark Zuckerberg. Um, well, that's a question I get almost every week on mentoring sessions on LinkedIn. How much should I spend on Facebook ads for my campaigns? And there's not really like I would say the same answer from everyone. Everyone has a different option, a different sense of what the answer should be. So I'm going to give you two ways to calculate your Facebook ads budget. One way is based on your sales objective, and the other way is based on your Facebook ads historical data. So if you already have Facebook ads historical data, you can take the Facebook ads historical data formula. If you don't, then you can take your sales objective formula. So you probably heard this thing. So you need at least 200 euros a day to see results. That's what some people might recommend you. And say, oh, for Facebook algorithm to work well, you need 200 euros a day. Or maybe you've heard this one, which is the most common one, which is the one that Facebook ads rep will tell you about, or Google ads rep. You need 5x your CPA for your daily budget. How would you know your daily budget and CPA if you have not done any campaign? Well, let me tell you guys that you need to forget about these two things. These are not the formula to calculate your Facebook ads budget or daily budget. These are just way for Facebook and Google and any other platform to get you to spend more, because that's how Facebook ads commercial team is paid. If you increase the budget, they get their commission. And I don't do that. I don't really care how much you spend on Facebook ads because I don't work with Facebook ads. I only do email marketing. Obviously, you need to spend to get to where you want to go, but we're going to get there. We're going to go from two formulas and two ways to calculate your budget based on where you want to go and not on what Facebook wants from you. So how do I calculate budget? Well, first of all, I don't start from the budget. I don't go like, this is how much you should spend. I start from the objective. I say, how much money or sales do you want to generate in 1 month, in 1 year, to do forecast, etc. And then we reverse engineer to the budget. It's like if you go on holidays, you don't start by saying, I have 200 euros budget to go on holidays, because you don't know where you want to go. You don't know the hotel costs. You should say, well, I want to go to Rome. I want to do this, and that. I want to stay in this kind of hotel. Let's say, how much money should I, keep as a budget? But you don't do the other way. You need to know where you're going or where you want to go in order to know how much budget you should have. So here is my first formula to calculate your budget. Your revenue objective multiplied by the percentage of your gross margin. Now, it might look like a bit, what the hell is that? Let's get into it in detail. So first off, what is the gross margin? If you have a business, you should know about it, probably. Some people include more things in it. Some people include less things in it. But for the budget calculation and to know how much resources I have at my disposal to spend, this is the calculation I do. So my gross margin is basically what is left of your revenue after you discount the tax, so the VAT, your return rate, your cost of goods sold, your logistic costs, payment fee if you're using a payment platform like Shopify Payments or Stripe or whatever. Technology, so technology can be the Shopify platform, any apps you can use on your online e-commerce, email marketing platform, and then your marketing costs. So by marketing cost, it's not the spend on the ads, it's only the spend on the team, the spend on the content, on the resources to sell the collection, okay, to sell your what you expect to sell in your gross revenue expectations. So in this case, for example, I have a gross revenue of 200K. My net revenue after VAT and return rate is 148,000. Then I take out all these little goodies of COGS, logistic, fee, technology, and marketing costs. And I am left with a gross margin of 34,000. Okay, so that's my gross margin. And that means that if I don't spend anything and I manage to sell 200K, I have 34,000 in positive gross margin for my business. And then obviously I have some extra costs, which are other employees, structural, rent of the office, blah, blah, blah. But this is like the margin of the online e-commerce, I would say, and with the team associated to it. So if I don't spend anything, I manage to sell all this, I have 34,000 in spend. In this one. So this is the maximum amount of money you have at your disposal to achieve the 200,000. Now, obviously, you want to spend less because you want to have a positive margin, or you want to spend the same amount, but you want to sell more. So what happens? If you invest 34,000 and you have extra revenue, that means more than 200K, you have a positive net margin. You have more money than you planned on. If you spend 34,000 and you have less than 200K in revenue, you have a negative net margin or gross margin, okay, for your department. So that means that you have 34,000 in gross margin that you can spend to get the 200K. If you sell more, you get positive. If you sell less, you sell negative. You can also say, well, I'm going to spend less, like 20K, see how it goes, see how I'm on compared to the objective, to my forecast, and maybe I can increment the spend, I can decrease the spend, but you always need to have in mind the forecast and the P&L, this one, okay? So as I said, to simplify the calculation, if you have like a lot of data in this table and you have like a year, 2 years of data, and you know that by investing 34,000, you get 200, you can use the percentage of gross margin over the net revenue. So 34,000 divided by 148, which is 22.8%. So to simplify it, you can say, well, I want to spend 22.8% of my net revenue in ads every month. Obviously, some month you're going to spend more because it's like full price and you need to get more traffic, and then some month you're going to spend less because it's the summer sale, so you're going to get less money in margin because it's discounts, blah, blah, blah. But as a rule of thumb, like the average of the year might be 22.8% of your net revenue allocated to ad spend, or in this case, Facebook ads, okay? So what happened, as I said, during discounts, when you run a sale, for example? Well, when you run a sale, usually what I like to do is to put out an average discount as a cost in the P&L. So I have my gross revenue, I have my average discount of 15% that I put out as a cost. That means that I have much less money to do on the gross margin, and I can only spend 11,000. Now, take into consideration that because I have a discount, my conversion rate will be higher. So I need less money to get the sales because the conversion rate might be twice higher, 3 times higher. But if you have a sale, that's a good amount. That's a good way to kind of forecast how much spend you're gonna do. So that was my first one, as we said. So you calculate your gross margin and you apply the percentage of it to know how you're gonna spend. And then this is a calculation based on Facebook ads metrics. So if you have already an historic of Facebook ads metrics that we're going to talk about, you can use this calculation. I prefer to use this one because it's more related to the platform. And so you have less surprises, but it's very similar in the end results, as you're going to see. So we take data from Facebook ads, basically. So as data, you would need the average order value, your conversion rate, the percentage of paid session, and then the CPC. Okay. So my net revenue is the same, 150,000. My average order value after tax is 67 euros. I need to get to that net revenue 2,220 orders or clients. My conversion rate is 1.2%. I need 185,000 sessions based on that conversion rate to get to that sales volume. I have a percentage of paid session of 60%. I need that amount of paid session. I know that my average CPC is 0.35. Then I need 38,000 in spend, to achieve that result. You can also do by CPA, obviously, because but the CPA, the problem with the CPA is that you don't really know for sure which order comes by paid. You only know the sessions because of UTMs and stuff, but it's very difficult to attribute sales nowadays with the campaigns. So that's why I go with the CPC, the conversion rate, the average order value, and the percentage of paid users. So again, that is if you have enough data from Facebook ads. If you don't, then take out the gross volume, the gross margin based on your business metrics. But I like to do both, to really get an idea of, okay, so the gross margin with the business metrics give me that gross margin to spend. And then this calculation through Facebook ads data give me that potential spend. And then you do a kind of balance. Okay, so one is 40,000, one might be 30K, while I do 32, 35,000 to allocate to my budget. But that's the way I do it. So the two ways, remember, always have these two tables ready to calculate forecast, to calculate your budget. So one based on your business metrics and one based on your Facebook ads or Google ads or any platform you want. I took Facebook ads, but that's the most common one. But I always do both of them. If I have the data to do it, I always do both of them and I compare them and then say, well, let's go with one of the two or let's go with the average of the two. But usually, if the job is well done, it's pretty close. I haven't seen one case which was 20 and the other one was 50,000. It's usually pretty close. So yeah, as I said, go back to the slides if you want. It's pretty simple. You just need to do these two tables. And then you will see what is your gross margin in case of the business metrics and what is your needed spend based on the Facebook ads metric. And as always, if you like the video, please give it a like. If you have any questions, let me know in the comments. Subscribe to the channel, reach out to me through LinkedIn, reach out to me through my website, through email, whatever. Happy to give a bit more feedback or a bit more, tips to your specific case. Thanks a lot for watching, guys. Hope it was useful for you. Hope that now you know how to calculate your Facebook ads budget or your spend without the typical Facebook ads team 5x CPA answer, or with a typical daily minimum budget. That's more advanced. You need data for it, but we all need data to do forecasts. So yeah, I hope it was useful. Hope to see you guys in the next video. Take care and peace.